Oh, good morning, good morning, good morning. How we doing? How we doing? Previously on Kimba TV. You see how it's doing this? And it's doing this. So my average is probably here. So yeah, you could talk to me about a 39.5 sweep. You know, could you sweep that? Yes. Like that? Yes. However, doing a full complete fill, going down to there, that might be the juicy Maguchi. That would be the scenario if you're going to front run the poor low. Yeah, buddy. All right, let's do the roll call real quick. Market very easy. Muncha says, can we have a look at Tesla? Sure, but it's just mathing, y'all. Make sure you're caught up on the Tesla TA. What about it? Third time's the charm. Hopefully that short works out. You know, if you know what I know, if you know what I'm talking about, mate. Yeah, just mathing. But tried to short there, stopped out in profit. Tried to short there, stopped out in profit. Trying to short again here as we plan. Let's get nasty. Yeah, nothing really too crazy. Just normal math. You know what I'm saying? Nailed it says math is mathing. It's super mathing. It's crazy. Where did we leave off yesterday? 7.5 rejection. What do you think it's going to try to do now? Can Kimba box hold? Bulls, you got to hold that thing. Crypto Hawk says, do traditional markets follow tighter math than BTC? Yes. Nailed it says, ETH is doing its thing, worth the wait. Yeah, look at ETH BTC. Do you guys believe in the math now? Do you believe in the math, my boy? This is ETH BTC. It's almost there. It's pixel fucking. Let's get nasty. The math is the math. Karen says, do you still want to long if it goes under the previous low? What does that mean? Karen, make sure you watch the highlights, Karen. Did you know that I literally said what my next long was? Karen, do you know what my next long attempt is going to be? We went over it yesterday for quite some time. So if you don't know where my next long is going to be, make sure you watch the highlights because it's, I would say maybe 2 hours worth of TA. Karen says you said 38.5 would be the next long. Yes, but what was the conditions? What would make me feel bullish when we get there? Right? It's not about the level. What would be the edge for the reason that I would take that? Do you remember, Karen? I think you know. So it's not like I'm going to put blind limits at 38.5, right? Karen, I would like to see open interest drop, right? Depending on how much the open interest drops, I'm going to either be on a smaller time frame or a lower time frame, or excuse me, a higher time frame or a lower time frame for the candle body close on the swing fail. So as it's going down, I'm going to be watching open interest. If open interest is satisfactory, if it completely nukes, then I will be on a 5-minute, 15-minute, smaller time frame sweep structure. If the open interest doesn't really nuke, then I'm on 2 30-minute candles for structure. Alrighty. Merdus, what's going on? Goes BTC says ETH BTC nasty. It is nasty, but brother, it's math. Are you enjoying this? So yeah, it is nasty. However, as we approach, the trend line, the golden pocket, the VWAP, we're going to start to get a little bulla, right? So just patience. We got to make sure that it's able to close outside of it. Otherwise, it's not a bullish retest and we're going to go lower. And you know how I feel about that too. Plan is the plan. Lorenzo says, a little late. What did I miss? Nothing much, brother. I mean, I don't really know how much more additional TA I could do. The levels to the downside are exactly the same as yesterday. We didn't do anything overnight. The levels to the upside, exact same. The levels to the downside, exact same. You got S&P trying to do its thing. You got CME or BTC trying to do its thing. Yeah, there really isn't much to... Let me know if you have any questions, Lorenzo, but the levels to the upside and downside are exactly the same as yesterday. It's as if we just paused the markets and then resumed it just now. So whether I have a 39.6 long or I have a 40,150 long, I'm not going to like overly risk myself for a $600 difference in the entry. Roger that. And if for some goofy ass reason I don't, let's say that it does this and it just keeps going and I don't get like some sort of pullback to here, well, then you know that I'm going to be looking for the pullback to there. Yeah, so most of it just comes down to like the math, right? Is it worth it for me to keep chasing the long if I already attempted it once? And the only difference would really be a $600 difference on the entry. I usually just kind of quantify and break it down logically. So it's, there you go, Kashmar. I'm trying to think anything else that might be helpful, but you're good. So like that's how I could get back into a long, Kashmar. All right. And I'm still not gonna I'm still gonna keep this bitch open. But yeah, I'm not gonna make it too difficult. So any other questions, Kashmar? Let me know. What about you, LPZ? Tigran says, what's the stop loss in that situation? That's a good question. Like this. I would probably do something like this. Like something like this. Lower low. And then this would, you know, you would run it. Touche, motherfucker, the math is you might be able to get away with doing something like this or like this. Some people might put it behind the point of control. I think that would be a little bit too obvious and it's going to get swept. So I would try to avoid getting swept and probably just do it like this. But you might be able to actually do something like this or, you know, one of these like ranges. So you could even do something like this. Instead of the price action swing high, swing low, just take the Fibonacci level of the TPO range. Oh, whoops. You could do that or even that. Yeah, the most obvious would be that you're going to be making what? You're going to continue to make higher lows. And so just, you know, stop loss right there would be pretty sensible. I think you could do, you know, the tails and the point of control. You've got the volume there too. But I think that would be too obvious. So I would almost expect like a wick to stop all that out. And then for example, when you leave the range, when you're actually doing this and leaving this range, you would want volume. You don't want average shit. Like when this is going out, you would want think. And depending on how big that is and how big that is in relation to how open interest shows up, is it this way or is it that way? That would also kind of like help you adjust as well, Tigran. But you know how you know how they say like on a breakout there should be convincing volume. That's like second grade TA, right? So you would have to apply all of those basic like fundamentals. Biz414 says, is a short at the top of this range an attempt? Not for me because I'm already in one, but if you see like a hidden bear div, you know, I think another thing that you're going to notice is that the hidden bear divs on CVDs are much better than hidden bear divs on RSI, right? So, because on the RSIs, they can break sometimes. But yeah, if you have edge and it gets to a level, why not 414? Like on the bearish side, if you see a breakout out of retail arena, but there's no volume and it also builds like a hidden bear div or even a regular bear div, it might be worth a shot. If its swing fails, it might be worth a shot. Like if this goes like this, open interest is declining, volume is super low, and it tucks back in, that would be a short, right? If all this is a squeeze, and so open interest is going down, on the breakout, the volume is hella low, so it's not convincing, and it does a bearish structure. It tries to get back in the range, but it goes back. Maybe it taps that point of control, and it just goes dink, and then it's red, red, red. That would be a short, right? Let's go. Let's go. What is this? Oh, it's nice. Does that help, Biz414? Not really trying to predict the future, but like lining up the data. So if there is a bearish edge, then we'll be able to identify it properly and take a shot. That one's a little bit more difficult to figure out the stop loss, because you've got a single print here and a point of control here. So you would go... So if you were gonna play a swing fail, then you would probably have to wait until the structure is formed, because there is a possibility that you could go grab these poor highs, grab that, and the single print. And again, we talked about this for the last 2 days. This level, these levels, if you guys remember. So exclamation YouTube, make sure you get caught up on these. Like I said in the morning, the levels to the upside haven't changed. The levels to the downside haven't changed. So anyways, lots of confluence. Yeah. So some people might say, okay, I see it and I've been taking a couple L's. I can't afford to be too hyper aggressive. I will attempt this, but I need to have it do a structure formation below 40,600. If the open interest is nuking as it goes up, then maybe I will only wait for a 5 or 15-minute candle close for the structure to be completed. If the open interest isn't doing anything, somebody might wait for a 30-minute. Some people, somebody that's playing with huge profits might be like, yo, fuck it, YOLO Bugatti, and just fucking have nets, limits like that, and then maybe stop loss, stop loss at 886 or maybe like at 42 thou. But you guys see it, right? Single print right at 75786. The poor highs start right at the 7.5, and the TPO point of control lines up at the 618 and is right above and could be a sweep level. Unlimited says, ETH BTC pair, please. Sure, but what do you want to talk about, brother? Because we've beaten this shit to death as well. What do you want to talk about? This is the daily candle close.
Motherfucker, the math is the math.
So far, so good. What would you like to talk about? So here's the oscillation. RSI still has a little bit more room to go, correct? MACD, stochastic hasn't curved yet. Wanted to check something from your point of view. Yep. I mean, I'm still trying to be patient. Am I surprised that it's bouncing off of the pixel perfect 0.5? No. Am I surprised that it's trying to hold the mid-level VWAP? No. Am I still going to be patient? Yes. The three things that I'm waiting for, have they changed? Nope. I'm looking at the lower bound VWAP going up to the golden pocket. I know that this can take weeks if it needs to. I'm watching the golden pocket and I'm looking at the bullish retest of the bearish trend line. And I also know that I have to be careful because I can get another. And if that happens, we're looking at sub 1,000 ETH. Right? But the plan is the plan. We got the swing fail of that level. We broke out of this. And so now I just need to make sure that this breakout was real, meaning there's a bullish retest. There's a mathematical bullish retest. There is a pattern bullish retest, the diagonal resistance line, and there's a volume-based bullish retest. Ideally, I would want all three to occur at the same time, but I know it's never going to be that easy. So I have plans for, what if I get this one and this one, but not this one? What about if I get this one and this one, but not this? I've already gone. I'm all good to go. Okay? And just because ETH BTC is bullish doesn't mean that I market smash long ETH USDT right away, right? I still have to do TA on the USDT pair and get in. All right? And then look at what ETH is doing right now. Pixel perfect. Support is holding 886 math, okay? But if we do, if Bitcoin is going to go to 33, I would love like a 1700 long. Alpeasy says, Kimba, my man, I know I'm asking a lot of questions, but I got one more. I know you're planning on a hedge long to the downside, but can you recap the scenario where you would hedge long again if we break the upside? Yep, yeah, so we talked about it before, but like any levels that you can identify as support or resistance getting flipped would be ideal. So right now there's this and there's this. So do you remember when we did this? And you see that, right? The TPO, naked untapped point of control. So something that we talked about was sweep that, tap the naked point of control, tuck back in. Okay, that might be a short. However, if you bounce on that, that could be the long. So turning that into a support. And that kind of has always been the idea, hasn't it, LPZ? It's the 40,150 level. So I'm done with trying to attempt longs from this level. Go and go would be nice, or go and go. Ultimately, this one is more bullish than this one. This is the range. This is retail arena. So you can kind of see how let's get back in, turn in, and then go to the other side. I think MGK will put like the highlight version of this because we did talk about it for a little bit. But yeah, I would identify resistance and I would identify previous value area low. And those two levels getting turned into support would be a good little catch up. Is that what you're asking, LPZ? So sweeping that, like tap, because we were talking about shorts that might be coming up. And so when we were talking about this short, the one thing that could mess you up is if it just immediately turns this into support. Theoretically, if it's a swing fail, this is the value area high. So you need to tuck back in this. Obviously, you want a candle close below the sweep level, but the real value is here. So you need to tuck back into retail arena again. Turning this into support could see you penetrate. Yeah, but you know, getting back into this, so like you could have this, you have like a smaller time frame, try to chase it, but really if you also miss that and this just goes, then you have this true break back in, and then you basically have a failed auction of that 40,150. You see it, LPZ? And then the question becomes, okay, well, what would be my TPs? So you can see volume and volume right there, right? And then we also did this on the daily. Make sure you remember to do this. So this is the CME, value area low, value area high. Let me let it come back in here. Makes total sense. Pretty straightforward with flips and possible scenarios. Yeah. So even though this is the actual box, you have different levels. And here's the most important part, I guess, LPZ. The fact that you left that poor low behind actually would make it bearish. And so I still wouldn't close my short. I might even add, but I would be looking for something like that. You know, but this is the most important one right there. This guy right here. Grab it, go. And then obviously you know that this grab, and it depends on what it does. If it just goes like this, and then you would be looking to see if this can bounce. And then, you know, like you would do something like this probably. Ooh, if that 0.5 held, that would be so nice. Gucci. So that's why LPZ, like once I got stopped out yesterday, I think you were the one that was asking, hey man, on this long, now that you made a higher high, do you move your stop loss to break even? I think that was you asking. So once I got stopped out, then I was like, I don't really care whether I have a 396 long entry again or I'm $500 off and I have a 40150 long entry again. Because if you remember what I was talking about a week ago, wasn't that the original plan anyways? If it reclaimed 40,000? 40,150, whatever it is. So you've got that level for a potential bullish retest. You've got this for a potential bullish retest. And if you miss both of those and you're still bullish, then you have the value area low on CME for the full rotation. Getting that would be really bullish, right? There's your point of control right there. LPZ says, I got stopped out as well on that one. That's okay. It's because on a hedge, you should never really let a hedge go red. It kind of defeats the whole purpose of a hedge, if you ask me, because you're almost like doubling the loss, if you will. You don't get any money that you close the profit on, or you don't take any of the profit with you. So when you close it on a loss, and then look at the single prints. Alpezy says the problem with longs here is the structure just isn't there for a move to new highs, so looking to get aggressive with TPs. Yeah, and have you also noticed that we've had a couple of days where the daily open is in between the previous day value area high and value area low, so that's an inside day. The more inside days you have building up within a range, the more explosive it can be when it leaves. And historically speaking, you haven't really left a range until you grabbed all the poor lows and poor highs. So still looking to see if that can swing fail. If that can't swing fail, then I would still be looking for 37, like 36.9 would be the next level, and then 32, 33, 31s. But grabbing that poor low, doing a swing fail would be pretty bullish. And then I wouldn't be shorting 45 or 43 or anything like that. I think we would actually make higher highs, like 50s. So lots of opportunity. This long would be the easiest and the safest for me, in my opinion. Obviously, if it wants to do some goofy swing fail pattern, tuck back in, trap a lot of shorts, and then do a bullish retest and squeeze. That's also possible. If for some reason I'm sleeping and I wake up tomorrow and I missed it, well, I can also wait for something like this too. I can wait for that, or if it completely blasts through, I can also wait for that too. But I'm only longing as a hedge. If I didn't have this short, I don't think I would actually be longing. So lots of different things. And the other thing too that we talked about was how you could actually leave that poor low down there and just do a higher low. So you have TPO point of control right between the 7.5 and the 618. And then on the CME, that's pixel perfect for the CME gap and golden pocket. So if it goes up without grabbing that poor low, then I would be looking to short like 40, like 42, 43, all of the different levels that could be resistance. Tofinho says, quick question. If you have a bullish divergence and simultaneously a hidden bearish divergence on the same time frame, does one typically trump the other? Yes. Whichever one has been winning historically. So what you need to do, Tofinho, is you need to remember or go find the last couple, like the last 3, 4, 5, 6, 7, 8, whatever sample size you would want, and then figure out what it's been doing. The trend is your friend until it ends. So if the trend is that if it's going to be taking the bull one over the bear, then that's the one that you should go with because that's historical patterns. Okay, the other thing that I would advise you, Tofinho, is to really like understand the difference between a regular divergence and a hidden divergence. A regular usually indicates a reversal. So if it's dumping, and then you get a bullish regular div, it might mean that that dumping is now over. Okay, if it's dumping, it pops up a little bit, and then it forms a hidden bear div. A hidden means that the original trend is resuming. So if it's dumping, and you get a hidden bearish div, that might be better to take. So it depends on what you're anticipating. Are you wanting the trend to change? If so, you might want a regular divergence. And then if you have concluded that you want a regular divergence, you need to go back and make sure that do you want an RSI divergence or a CVD divergence? And the only way you're going to know is to go back again and see which ones have been working. If you look at the last 5 RSI bullish divergences and they're working out, all of them, take it. But if you notice that only 1 out of the 5 regular bull divs have been working out, but all of the CVD bull divs have been working, take it. If you can't find a pattern, then that's not confluence or edge that you can use. So I hope that makes sense. So for example, Tofinho, this is dumping, right? The fact that it's kind of ballooning and arcing like that is great because that gives you a higher chance of forming a regular bull. Like imagine if it does that and that's a 4-hour bull div. I think I would prefer a 4-hour bull div than a 15-minute hidden. So I hope that makes sense. You're going to have to factor in and sprinkle in a couple of things, but if it makes sense, it all fits together pretty nicely in my opinion. So does that make sense, brother? But like if I were to look at this right now, I would love a 4-hour, 6-hour regular bull div because a regular bull div indicates a change in the trend. Okay. Do you remember when I was talking about you might be able to argue for like you see how this is a higher low? Hofinho, you see how this is a higher low, but what is this? This is a lower low. So what do you see on the CVD right now? There's a hidden bull div on the smaller time frame, right? But what hidden bull div for what? For this? A hidden is what? A resumption of the trend. What trend? Right? The other thing too is this is a small sort of time frame. What would be nice if this comes back down and it still makes a higher low, okay? But you have an even bigger bull div. So imagine if this rolls over and it makes a lower low in comparison to this pivot point. The CVD makes a lower low, okay? But the price still makes a higher low. That would be an argument for how this could be it. If you're somebody that says, hey, man, it's not going to go grab that, it's going to save it, then you could be somebody that makes an argument for this. You could talk about CME gap. You could talk about Kimba box. You could talk about TPO, point of control. Okay? And you know what's really crazy that'll really get your brain going? If you're bearish, you might actually want it to pump from here, leave that poor low, let the fucker take it, and then really dump it to 33. Sometimes when you're bearish, you want that poor low to get left behind, let it pump, and then it can shit. Swim 1944 says, my man, do you think BTC can go lower than 32K? And if it dumps below that, do you think it will go 15K to fill lower CME gaps? So do I think it'll go lower than 32K? No, but just remember that this is not really about predicting the future. So it's not really like if it does go lower than 32K, I already have a plan and I would actually start looking to long 17. I don't think that 15K gap gets filled. In my opinion, you lose 15, you're actually looking at that 9K CME gap. Losing that 15 would be really bad. But, you know, rotating back and bouncing at 17 would be probably the statistically higher probable move. It should make, it can't, it can't, not can't, but the structure has to hold for a higher low for it to be bullish. Breaking that previous low would be really bad, in my opinion. But yeah, so if it wants to lose 32, then I have a plan. But when you say 32, you're talking about the zone, right? Because it could wick to 30.8 and then tuck right back above, and it's a swing fail pattern, and so it's still held 32 zone, and we're Gucci. There's like interesting 31.2, 30.8. There's a lot of interesting like naked weeklies and daily levels and point of controls that haven't been untapped that kind of line up, albeit less significant. But it's a cluster of like lesser significant levels. And so, you know, it might add up to be a significant zone area, which just ends up like absorbing a big wick or something, right? But no, I guess if you put a gun to my head, I don't think it'll go below that 30 to 32 zone. I don't know how long you've been following me, Swim, but and I would just kind of maybe recommend, if you have time and if you want to, you certainly don't need to, but start watching the highlights from like the beginning of January. Every single time, I probably said it hundreds, if not thousands of times, because it was maybe 20 plus times a day. But when people were asking me what I thought the ETF was going to do, and I quote, it'll probably go to 48, 49. Maybe it can go to 50, 51, 52, but I'm shorting all that to the 30, 31, 32 zone. And so that's the foundation that I'm working with, and that's the higher time frame idea that I've been playing with for quite some time. So now, obviously, with newer data and different price action, we've able to maybe start to identify this area, the 38 to 40 zone, as a potential bounce area. So that's why I'm thinking about, opportunities to hedge long if it wants to rotate to, 41, 42, 43, 44. Yeah, I have been repeatedly saying that I'm pretty interested. If it goes to the 30, 31, 32, I will be attempting longs there. Alrighty. Could I still get round tripped? Yeah. Could I still take some small L's on those long attempts because it wants to get back into that 25 to 15 retail arena? Sure. Yeah. But when we nerd out and look at higher time frame liquidity, there really isn't much below that yet. Sounds good, Swim. Here's the good news, Swim. It's not going to creep up on us. We're going to know days and weeks in advance. But yeah, I'm not going to be afraid to long like the 30 to 32 zone, okay? If we lose that, then the next area that I'm probably swinging for like a big dick long would be the 24, 25 zone. And I would be paying attention to that CME gap as well. But there is a chance that we could still go to the 25 zone, lose 25, wick through 24 or something like that, not fill the CME, and then completely bounce. You know that, right? So that means that they're just going to save that for later, which means that we would have more confluence for the 52 short if we haven't tapped 52 first. So instead of bouncing from 30, 31, we nuke through that and we go to 23, 25, but we don't gap fill CME. Then I think that would be a confluence as we keep going up, right? For the shorts that we would be attempting to go and grab that. So just shit like that. Swim says, do you trade only crypto? No. Primarily, I focus just on Biddy, but pretty soon here, we're going to be jumping into altcoins. I'm going to, as the next couple of days, I'm going to have to really try hard on ETH because we're almost 3 for 3 on what we want. The first thing that we wanted, swing fail. Holy shit, can't believe. Hands up if you were here on this day when the red candle was down here and we were and I had even given up on the swing fail. But hands up if you got to see this candle formation live. What the fuck, right? Remember when the candle was red, the body was down here, and I was like, okay, clearly it's not going to swing fail. It could be a failed auction, though. So, holy shit, this motherfucker actually swing failed, okay? It broke out of this, and now it's doing the fucking bullish retest. Can we get nasty with it? I got to make sure I don't fumble the bag. Crazy because it's 2 years worth of work almost. 2 years almost. This peak was September of 22. So a year and a half of patience and waiting. Identifying the level, waiting for the sweep. Wow. But we got to try hard because all that hard work means nothing if we can't juice off of it. And we got to make sure we don't fumble that shit. So, and when we get that juicy ass long, that motherfucker's still going to come back in here talking about I just got lucky. But that's okay. I did get lucky with all of y'all. Let's go. Good shit, ladies and gentlemen. All right, y'all. I'll be back in 7. My alarm is going to go off in 5.5 hours. 5 hours. So I'll do my fasted cardio and do some work stuff, and then I'll try to start this as early as I can. Farazzo Frota. All right, ladies and gentlemen, it is what it is. The math is the math. Stay safe. All right. Longers, I'm rooting for you. Shorters, I'm rooting for you. Bulls, Bears, we're all Lions, y'all. You guys truly are the best. I always sit here and I wonder to myself, am I crazy for streaming this long? Or are y'all crazier for watching me for this long? You guys are the fucking best, y'all. Sato, tell them what happens if they don't use stop loss.